Change in ownership, class example 1. Please turn to page 5 of your handouts and look at class example number 1. This is an acquisition of a further interest in an existing subsidiary. I will scroll through this example, but I want you to stop the recording and read the example, make yourself familiar with the content, and then we can do the example together. Right, let us do the example. Fifi Limited became a subsidiary of Dada Limited on 1 July 20.7, at which date there was a credit balance on the replacement reserve as well as retained earnings amounting to 4,000 and 8,000 respectively. So that is your starting point, normal as you would have done with any analysis. Then, on the 31st of December 20.8, Dada Limited purchased a further 30,000 shares in Fifi Limited. Now, this sentence might not be in your handout, but what we have done is you can see there in the statement of financial position as given to you, there was 30,000 shares purchased on the 31st of December 20.8 at a cost of 39,000. So you must be aware of where you can find the information in the various questions. So let us continue. There's also other information. Now remember, when you purchase this additional interest, it is done in the middle of the year. And this other information will now give us the information to be able to calculate the interim acquisition portion of this question. So this is where you will now bring into play other items which you have learned previously during this semester. Have a look at the calculation that we have done there, the allocation of the profit for the two periods. So you have the profit for the full year, the 55,900. You add back the fine, which is after tax amount. In other words, it doesn't carry tax. You take that amount, split it between the two periods, then deduct the traffic fine in the correct period, allocate the tax between the two periods of 6 months each, and then you will get a profit for the year divided between the two periods. The period 1 July to 31 December 20.8, and then 1 January 20.9 to 30 June 20.9. That is now your starting point for your current year profit. Let's look at the analysis. Again, the first part of the analysis is calculate as normal. You will calculate an at acquisition gain on bargain purchase in this case, using the amounts given to you. Then you will continue to calculate the since acquisition reserves, also given to you in the question. And then we come to the current year. Now, very, very important, in this current year, you must calculate what is the situation up to 31 December 20.8. And calculate what is the interest which is currently standing at 60%. What is that interest? And this is the calculation that we are doing up to that point there. To recap, we are now calculating the reserves at acquisition and since acquisition up to the date of this transaction. So firstly, let's recap. You're calculating your gain on bargain purchase at acquisition. You've got that figures there. And then you calculate the since acquisition retained earnings, replacement reserve, etc., giving you subtotals up to that point, up to the beginning of the current year. Then you've got the current year. As we've seen previously, you have now calculated the profit for the first 6 months as 18,800, and that you allocate to the SINS acquisition and the non-controlling interest, 11,280, 7,520. Now, at this point, be very clear on the dividend. The question states that the dividend was paid on 30 September 20.8. For that reason, you have to allocate the dividend here in this first 6 months, because that is where this specific dividend was paid. Up to this point, we have now calculated the interests at 60% for the parent and 40% for the non-controlling interest. We must now continue and calculate how much the parent has purchased from the non-controlling interest. Now, they have purchased 15% additional. If you go and calculate that, it's 15% that was purchased from the non-controlling interest. But they held only 40%. And that is why we have this calculation that you see in front of you. This 91,000 represents the non-controlling interest at the date of acquisition of the further interest. Now we are going to purchase 15% from the non-controlling interest. So they held 40%, that one there, and we are now purchasing 15% of that 40%. From there, the calculation that we are doing. So that is why we are calculating 91,120 times the 15% that we are receiving over the 40%, which was the holding of the non-controlling interest per se. So the further interest that we are calculating is the 34,170. This amount that we have now calculated, the 34,170, will now be, as I said, this 30,170 will now be deducted from the non-controlling interest and added to the at acquisition column of the parent to transfer it, because we've now purchased that from the non-controlling interest. There is another method of doing the same calculation, but for that we have to take the total amount, the 225,600, add back, in this case, the gain on bargain purchase to give you the figure without the gain, or if there was a goodwill, you have to deduct the goodwill, and that will give you the figure without goodwill or gain on bargain purchase, in this case 227,800. Of that we have purchased 15%, and as you can see, that also relates back to the 34,170. Just another way of doing the calculation. If you look at the bottom of your analysis, you will see that we've done both of those calculations in that analysis. Now that we've calculated that further interest, we just have to continue with the SINS acquisition for the rest of the period. But now remember, the parent now has a 75% interest in this company. The 60 that we held previously plus the 15% that we purchased. Therefore, 75%. So if you look at the profit for the period, the 20,100, 75% of that, 15,075, will be allocated to the SINS column, and only 25% will be allocated to the non-controlling interest. And then we go through the motions, we do our transfer to the replacement reserve and the replacement reserve itself, and then we've done the analysis. Now let us have a look at the consolidation journals for these entries. Firstly, We have taken away the 34,170 from the non-controlling interest, so we actually debited their account. We, Dada Limited, the parent, made an investment in Fifi Limited at 39,000 rands. Now that investment is still lying in the books of Dada Limited, and therefore you have to eliminate that, and for that reason we are crediting the investment in Fifi Limited in the books of Dada Limited at 39,000. The difference is then a charge to retained earnings of 4,830. As you can see, that is a debit, so that will be a loss, which will be taken directly to retained earnings in the statement of changes in equity. Now let us have a look at the statement of changes in equity. Please, at this stage, go stop the recording and go and have a look at where we get those opening balances from. They are the normal consolidation procedures as you have been taught throughout this semester. So have a look at those figures, the 31,600, the 56,100, and of course the 88,000 non-controlling interest. The profit for the year, have a look at how you calculated that. Just a tip there, if, as in this question, we have calculated the statement of profit or loss and other comprehensive income, then you will be able to get that 73,055 directly from that statement. If that was not the case, if that was not calculated previously, then of course you will have to go to the analysis and pick out from the analysis. Let me show you. You'll pick out from the analysis, as you can see there highlighted, the 11,280, which was the profit for the first 6 months. You'll also pick out the 15,075, which is the profit for the second 6 months. Those two together gives us the profit for the subsidiary allocated to the parent for the period. Then you will add the profit that the parent made during the current year, but do not forget to deduct the dividend that the parent received from the subsidiary during the current year as well. Those amounts added together will give you that 73,055. Right, back to our statement of changes in equity. Now that you've calculated those figures and calculated the transfer to the replacement reserve, minus retained earnings plus replacement reserve, you must also allocate the dividend paid, and remember, please remember, the dividend that we show in retained earnings is only the dividend paid by the parent to its own shareholders. The 5,200 dividend paid to the non-controlling interest is the dividend that was paid by the subsidiaries to their outside shareholders. Then, the purchase of this additional interest. As you already know, we're deducting it from the non-controlling interest, and the loss that we made, we also deduct directly from retained earnings, and the total is then 39,000, which is then contrast against the investment in Fifi Limited, as you saw in our journals. Now, that is the case when we have when we purchase a further interest in an already existing subsidiary. As I said in the beginning, these are transactions with other shareholders, so therefore it is done in the statement of change in equity, any profit or loss that you make due to this transaction. Thank you.